Namaste. In this video, we will discuss about Indian Accounting Standard 105 that talks about non-current assets held for sale and discontinued operations. Objective of this Indian Accounting Standard 105 is to prescribe accounting treatment for assets those are held for sale and to prescribe presentation and disclosure requirements for discontinued operations. This Ind AS applies to all recognized assets and disposal groups with few exceptions. A non-current asset will be classified as held for sale if management is of opinion that carrying value of this asset will be recovered through a sale transaction instead of its continuous use. A non-current asset will be classified as held for sale if it is available for sale immediately in present condition and sale of the asset to be classified as held for sale is highly probable. How we need to judge that it is highly probable or not? So there are few conditions that management is committed to plan to sale of that asset. There is an active program has been initiated to find out the buyers and asset is marketed at a reasonable price in market and ideally the sale transaction will be completed within a period of 1 year. If an asset or operation has been classified to be abandoned, it will not be qualified for accounting or disclosure requirements under this accounting standard. Ind AS 105 does not apply to deferred tax assets, assets arising from employees' benefit, and financial assets. Those are measured according to Ind AS 39. Apart from it, it does not apply to non-current assets under Ind AS 41 related to agriculture and contractual rights arising from insurance contracts. Those are dealt with Ind AS 105. Another principle in 105 is measurement of assets classified as held for sale. So it will be measured at lower of carrying amount and fair value less cost to sale. In case assets are kept for distribution among owners, in that case it will be measured at lower of carrying amount and fair value less cost to distribute those assets among the owners. Let's understand how to apply this measurement concept. So we divide the complete situation in two categories. One, measurement before classification of asset as held for sale and after classification of asset as held for sale. In case before classification, the respective applicable Ind AS will be applied in measurement. For example, in case of PP, we will apply either cost module or revolution method. And the after classification of the asset as held for sale, asset will be always measured at lower of carrying value and fair value minus cost to sale or cost to distribute among the owners as the case may be. In case of impairment of the assets before classification, it will be in line with the applicable Ind AS and will be charged in PN or OCI as the case may be. If we are having the revolution reserve with us and asset has been impaired, so to the extent revolution reserve is available, it will be charged first to the revolution reserve. And in case of after classification of asset as held for sale, impairment will always be adjusted to the carrying value minus fair value less cost to sale, and it will be always booked in P&L. Once the asset has been classified as held for sale, we will cease to apply depreciation on the respective assets or group of assets. Next is how to deal with the situation when asset earlier classified as held for sale ceases to be classified as held for sale. In this case, the asset will be measured at lower of carrying amount when classified as held for sale minus depreciation or amortization or revaluation that would have been recognized if we have not classified the asset as held for sale, and Recoverable amount when management has taken decision to not classify the asset as held for sale. This is all about Ind AS 105, non-current assets held for sale and discontinued operation. We have discussed summary of it. If you want to know more or have any question, you may reach us at WhatsApp number given below. Thank you very much.